Alright then, good morning everyone as we head into European trade on Tuesday the 5th of December. We'll have a flick across markets, we'll see what's going on. A pretty negative handover from the Asian session. You can see Asian stocks slide as focus turns to US jobs. I mean, Hang Seng down 17% this year, S&P up 15%. The majority of other global indexes apart from China are up aggressively over the course of this year. So I mean, they're kind of putting that down to, as investors tempered expectations for cuts to US interest rates because we're waiting on NFP on Friday. I'm not so sure if that's really the case, if I'm being perfectly honest with you. I mean, it's is that really true? Is it? I mean, you see the way trends moved. I mean, I kind of thought the moving I did think the move in November was a bit overcooked. I've said it on these videos before. The move in November was extremely aggressive, probably too aggressive for what actually was the reason behind it. I mean, the Fed are not going to cut interest rates in March. Well, I'd be pretty sure they're not. I mean, they could. I wouldn't completely rule it out, but I'd really be surprised if they were cutting interest rates in March. But that's what stocks were rallying off the back of. What did they cut in June or something like that? Obviously, a different question. But in terms of the way a trend moves, like a trend that moves higher as aggressively as stocks did over the month of November, you need pullbacks. You need pullbacks to have a healthy trend. You can't just keep going higher at a vertical pace forever. It just doesn't happen. It's never happened before. It will never happen in the future. You need ebbs and flows. You need pushes up, pulls back, pushes up, pulls back. This is just a bit of a pullback. I mean, the financial news sources would be like, oh, stocks are down because of this, or stocks are up because of this. Ultimately, I think it's still just a pullback. You got to think of it at the extremes. Has something changed? No, you've had no economic data to suggest something should change. Okay, if unemployment starts to get out of hand or something like that, or inflation starts to push back higher, they could be negative for stocks. But as of now, nothing really has changed. So I still think the trends are intact, albeit a bit of a pullback. Is it a chance to add some positions? I mean, we had Mark Zuckerberg out yesterday selling stocks for the first time in over 2 years, selling off shares of Meta. So what's he doing that for? Is he seeing something negative upcoming with Meta itself or the economy? I'm not really too sure what he sees, but obviously he or people or his advisors do see something. But we'll I guess we'll have to wait and see, won't we? I see oil prices little change with OPEC plus cut doubts over OPEC's cuts, voluntary output cuts, not mandatory output cuts. So really we got to wait and see, do countries actually follow through with voluntary cuts? Middle East tension, so tension in the Middle East, continued tension in the Middle East. Obviously the situation in Gaza, I mean, it's not really happening on the price of oil. You look at the chart of oil yesterday. It's something you definitely want to stay away from. The Australian dollar is a bit upset. When I wasn't upset, but with the RBA overnight, you're kind of expecting something a bit more towards a hawkish stint. They're not back to talk to us until the 6th of February of next year. So it's a good couple of months before we hear from the RBA again. And I would have thought they would at least talk a good game. I mean, they basically just sat there and be like, we're data dependent going forward. We're going to monitor the risks to inflation, risks to the global economic outlook, risks to the labour market, these types of things, and they will watch the economic data to decide on any future monetary policy adjustments. I would have expected them to at least say, we're thinking about hiking interest rates again. Just judging off the fact that CPI is still at 5% in Australia. They did note that inflation was not coming down at the speed they had anticipated. It's pretty similar across the rest of the world, but still at 5% in Australia. I probably would have thought they'd at least talk a good game, as we don't hear from them for 2 months. But they haven't. They probably want to wait for Q4 inflation data. Remember, inflation data in Australia is quarterly. They do have a monthly CPI indicator, but it's not the headline figure that they do release. So we'll get that next year. Probably what they want to wait for before they make any decisions in February of next year. Apart from that, you can look at a pretty negative handover. You can see US stocks lower across the board, European stocks lower across the board, Asia Pacific stocks lower. The Hang Seng down 2.5%, the CSI index, which is the Chinese stock index, down a couple of percent. The Asia Pacific region, once you exclude Asia Pacific region, once you exclude Japan shares, down a full percent. Really pretty negative handover across the board on stocks. Bonds being purchased, so yields are lower again. That's a bit of risk off trading. The US dollar is higher, again a bit of risk off trading. The US dollar is higher against everything apart from against the Japanese yen. The Japanese yen higher across the board with the Swiss franc, so pretty clear risk off trading. You then chuck an Aussie, the Australian dollar lower, Kiwi dollar lower with that. Commodities aren't really playing ball. Bitcoin up 150% this year, a bit of a pullback in that, which is somewhat understandable, but pretty negative morning across financial markets today. It's not really driven by any sort of real world problem. It's just kind of the way markets are shaping up this morning, which is interesting. Services PMI out of China overnight, relatively positive, but we'll wait and see how this economic data unfolds over the course of the European session today. We've had some industrial production figures from France, minus 0.3, below the consensus of 0.2, so not great figures. Figures don't make for great reading out of France first thing in the morning. But services PMI is not really the most important economic data from the Eurozone. A little bit more important when we get around to the UK. Services PMI from the UK, the services sector is more important for the UK economy than the manufacturing sector. That's expected to be above 50, so it wouldn't surprise me if that comes in above 50 and even in line with consensus, maybe a bit more. Wouldn't surprise me if sterling is supported then off the back of that, but we'll keep an eye on that as when we get through the session. I'm not going to sit here and try and make predictions off where price will go off the back of that economic data. It's not really where we're going to focus our attention today. We've got some job openings from the US, which is kind of more what we need to look at. Consensus of 9.3 million, previous 9.553, so that would be a bit of a positive one, but job openings can be a little bit of a tricky one. When we get job openings, if job openings go down lower, I mean, it could be one of two reasons. It could be just less jobs being offered, so then there's less job openings, or it can be a sign of strength in the employment market. I'm going to guess that's probably less jobs being offered, but that is just guesswork for me. I'll find that out in the low impact economic data, but we'll break that down later on today or tomorrow. At the Bank of Canada tomorrow, so we'll keep an eye on that. We'll speak about that more when we get around to it, but that at those job openings and job openings today, ADP tomorrow, and then into non-farm payrolls, the unemployment rate on Friday. So ADP job openings and ADP will potentially give us a bit of a front runner for these figures today, or on Friday should I say. So we'll keep an eye on the job openings today. Does that give us a bit of direction one way or the other? We'll have to find out when we get to it, but you can see across the US dollar, a bit of US dollar strength to begin the session. You can see your Aussie, Kiwi, Euro and Sterling pushing lower. Come around to your equity markets where you can see your S&P, Dow Jones, Nasdaq and your Russell all taking a slight turn lower. The DAX is down slightly, albeit grinding lower, but it's still a bit of a pullback from this uptrend. Euro stocks the same, the FTSE the same, so stock index is lower across the board in today's Asian session. You can see Aussie yen and Kiwi yen both cruising to the downside. Aussie yen and CAD yen, should I say. CAD yen not being driven by lower oil prices. Sorry, so it is just Japanese yen strength. You can see the 10-year yield, the 2-year yield, slightly higher on the trading day, or slightly lower on the trading day, should I say. Bonds are slightly higher. Not exactly by much pace, but interest rates lower. The fact that stocks are lower, it suggests it's maybe a bit of a safe haven play. But interesting moves to begin the session today. I mean, how does this react at 8 o'clock? Once we go into the European session, or once European cash trading opens, it's maybe a bit tricky, but we certainly got stocks under a bit of pressure to start the day. US dollar being supported. A bit of risk-off trading across the board. Does that continue on into today's European session? I mean, after yesterday's solid move to the downside, it wouldn't surprise me. Do have a few kind of support levels, or a bit of a support level to get through to the downside in the S&P, but I still think the trends are intact. I still think the path of least resistance for stocks, certainly at this moment in time, is higher, but that's not the way markets are shaping up today. I probably still look to buy dips, but do you want to buy dips when there's risk-off trading across the board? For me, personally, not. Right, if you want some short-term trades, I think downside and stocks, upside in the dollar is the way to go today. Does that change the trend overall? Not in my opinion just yet, but it certainly looks like it's setting up for a negative day today.